Hey, let's explain the prepaids. What is it and how does it work? Let's take a scenario to explain what prepaids are. At the closing table, get the common question is why am I paying the insurance money twice and why am I paying the property taxes twice? So let's try and explain what is going on. So when you are buying a house, the way the prepaid works is uh, everything. It's all about the this column H, the escrow balance. So when you're starting a new mortgage, you're opening a new loan account with the bank that pays the principal and interest, and there is a separate escrow account that is opened, which is also called an impound account many times. That's the correct technical word, called impound account. And within that, there is money that gets funded into this account, and then from this account, the actual property taxes and home insurances are paid. I'm taking a theoretical example right here. Yeah, every situation varies, every county varies, and the dates when the payments are made, everything changes based on the property location and the property taxes and the property insurance. So let's take an example where the property taxes are paid twice a year, once on November 1st and once on April 1st, right? Let's take a scenario where the home is being purchased on September 15th. The first mortgage payment is on November 1st. Uh, Remember, the mortgage payments are paid at the end of the month. So the entire month of October, the payment for the October is actually paid on 1st November. So if you close on 9/15, the 15 day of interest from 9/15 to 10/1st is charged at closing, and the entire month of interest from this October 1st to November 1st is actually charged on November 1st. That's just how interest works on a loan. So let's assume the annual insurance cost is 1,200, annual property tax is 5,000, and principal and interest PITI, principal interest taxes and insurance payment per month is 10,000. So your first payment will be 10,000, and your entire loan qualification is based on what you can afford in PITI in a monthly payment. So I split that up into two parts. Part of the PITI will be taxes and insurance, and the remaining money goes towards principal and interest. The taxes and insurance are calculated based on annual property taxes and annual insurance cost and then divided it by 12. So if we look at this, the total is 6,200. Divide that by 12, and the monthly taxes and insurance, this is a calculation, right? It's not the reality, is 516. If after 2 years of property taxes go from 2,500 to 2,600, then these numbers change, right? This number will actually go higher. So your monthly payment of 10,000 will go higher if your taxes and insurance goes higher. Even if the interest rate doesn't change, your payment for the loan doesn't change, your monthly payment can go higher if your property taxes and insurance goes higher. Okay, bring this back to 2,500 for what I'm trying to explain. So that's your taxes and insurance a month, and the remaining money goes to principal and interest. That's how the monthly payment is calculated. Now, let's assume there are no prepaids and you buy the house on September 15th. Then on November 1st, from this impound account, a $2,500 payment goes to the property taxes. That's just mandatory, right? That just has to go. And the impound account gets $516 from your payment. A part of your payment is $516. So in total, on the very first month, this account is going to be negative, which is not good. So what option do we have? Maybe we can pre-fund this impound account with on the closing date with this required amount, right? 1983. It's still a little negative. Let's just make it 1983.33, and it just keeps going on. Sorry. Let's just make it 1934 just for ease of calculation, right? And that still means if your payment over here is late by a little bit, or if something happens here, like for any reason, there's a very high chance that this impound account can become negative. So as per the law, the maximum that uh, any lender servicing company is allowed to keep in this account as a reserved balance is 2 months of principal and taxes insurance payment. So let's just add that. So this plus 2 into this, right? I think it just went in a circle. Let me instead equals this plus 2 times this amount, right? That means this account has just enough money always in its reserves to ensure your property taxes and property insurance is paid properly, because this insurance might increase a little bit by the time they reevaluate stuff and update it. It will just make it ensure like there is enough balance in the impound account to keep making payments for your taxes and insurance. So that's how this extra payment comes up, right? But if you see, the first insurance payment is actually happening on first, like almost after a year. So in addition to making these monthly insurance payments, you also have to, at closing, you also have to pay this 1 year of insurance over here, right? So in prepaids, you will have your home insurance, 1 year of home insurance, plus this reserve balance that is required, reserve balance, which is 2 times this amount, and kind of, I'm going to call it prorated property taxes, right? So that will come down to this amount because they need that to ensure there is enough balance. So your total prepaids will be a sum of these amounts. So that's how it shows up on a closing statement. You might see these things separated, like but when you see when you see the actual payment when you're closing, you might think you're paying twice, that you're paying the monthly amount and you're also paying a upfront 1 year of property insurance. But just remember, the monthly amount is just being collected so that at the end of the year there is enough balance to make the actual home insurance payment. uh, you're you might be charged a prorated property tax over here, and you're also being charged a prorated property tax over here every month. But this is, all of this is, it feels like you're paying double, but in the end the main goal is just paying it, just having enough balance in your impound account. Hopefully this video helps to explain how this works, and that's why you might need, in addition to all the other closing costs like title insurance and all the others, you might require extra money to actually complete the purchase. Hopefully this helps. Thanks.